Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines that we're tracking tonight. Tech layoffs continue in the new year. Amazon says it will cut 18,000 jobs, much higher than its earlier estimate of 10,000. Salesforce says it will cut headcount by 10%, which works out to about 7,000 jobs. Both companies say they hired too many people during the pandemic. Microsoft Chairman Satya Nadella expects the next 2 years to be challenging for tech companies after the pandemic-fueled growth. Admits that Microsoft is not immune, says the tech sector must look inwards to boost efficiency if it is to remain competitive. The government-appointed committee led by former SEBI chief M. Damodharan submits its report on removing regulatory friction and accelerating private equity and venture capital investments into startups, proposes to treat carried interest as capital gains and ease the GST burden on fund managers. That's a CNBC-TV18 exclusive. Crude oil prices remain on a tight leash after losing 9% since the start of 2023. This is the commodity's worst year since 2007. At the start of a new year. Windfall tax may not provide a significant fiscal cushion. Sources point out that the estimated benefit of 30 to 40,000 crore rupees is under pressure as oil prices fall below $80 a barrel, and that the tax mechanism is likely to continue even if levies become nil due to falling oil prices. That's another exclusive. VodafoneIdea promoter Kumaramangalam Birla meets the telecom minister Ashwini Vaishnav, seeks to nudge the centre towards converting licence fee and spectrum dues into government equity. Government clarifies its stance on conversion will be considered only if the promoters infuse more funds into the company. Market regulator SEBI agrees to reclassify the government stake in IDBI Bank post-sale as public shareholding, provided voting rights do not exceed 15%. Government to further clarify a period of extending the exemption from minimum public shareholding norms to state-owned companies. The one-year time frame granted by SEBI is standard and may not hold. Aviation regulator DGCA issues a show-cause notice to Air India in connection with the November incident of a drunk passenger urinating on another passenger on board. The regulator says that prima facie the airline has not complied with provisions related to handling of an unruly passenger. The airline has 2 weeks to respond. There's a political stalemate in the US. Republicans yet to elect a speaker for the House of Representatives as infighting continues. This is the first time in 100 years that the House has failed to elect a speaker on the first roll call. Email addresses of more than 200 million Twitter users leaked online. This is likely the biggest data breach suffered by the company yet. The Washington Post reports the data has been posted to an online hacking forum. From PhonePe to Swiggy, from Meesho to ShareChat, losses pile up at India's most valued startup companies. Blame the situation on a sharp rise in expenses and a high rate of cash burn. VCs point out that the number for the next fiscal could look a lot better. Before we get to all of that, here's a quick check on the day's market action. Equities declined again, with the Sensex and the Nifty ending in the red, and this despite a late pullback. By the close of trade, the Sensex was down 300 points. Nifty dropped below 18,000. Blue chip stocks and bank stocks struggled for traction. Mid-cap stocks appeared unfazed, though, and that index ended the day with gains. But in the commodity market, crude oil prices continue to be on a tight leash, this after losing 9% since the start of 2023. This is the worst yearly start for the oil market since 2007. In fact, the price of natural gas across the US and Europe is also down 25% over just the last 5 days. The drop has been fueled by fears of a global recession, concerns over weak demand from China. And another factor is that winter in Europe has been warmer than usual, meaning people have not had to use much fuel for heating. This lower than expected demand has driven energy prices lower. And speaking of crude, as crude oil prices drop below $80 a barrel, the windfall tax imposed by the government of India on crude and petroleum products is unlikely to provide the government with a significant fiscal cushion. Earlier estimates had pegged benefits from the tax between 30 to 40,000 crores, but sources say that is now under pressure. They also add that the tax mechanism is likely to continue even if levies become nil on the back of falling oil prices. Sapna joins us now with the exclusive details. Sapna.
The government is unlikely to bank on windfall tax accruals as a significant fiscal cushion. In government's view, had Brent crude oil stayed at $120 a barrel, around the same level when the tax was first levied, the revenue gains would have been significant. But currently, Indian crude oil basket is below $80 a barrel, denting expectations of substantial gains. The government now expects to garner roughly 30 to 35 odd thousand crores March end via the windfall tax. One view also is, on a net-net basis, actual revenue gain could be further limited to 20 to 25 odd thousand crores. This is because the government is likely to lose out on corporate tax collections from oilcos, the largest contributor to corporate taxes. Even if the government is able to net that 35 odd thousand crores, there are already claims against the mop-up. Government-owned OMCs have already been compensated by 22 odd thousand crores against their LPG losses. Further to that, the government is currently discussing compensating OMCs for their petrol and diesel losses too. Estimated losses arising due to the price freeze on petrol and diesel are pegged at a massive 45 odd thousand crores. However, one view within the government is that they do not have the fiscal space to compensate OMCs yet again. But discussions are not closed yet. Officials also say it would be difficult to have a clear-cut revenue target on windfall tax, simply because the price swings on crude oil and cracks are too many. At best, windfall tax collections can be subsumed into the overall excise kitty without a separate budget head. Also, the government forgo 1 lakh crore in excise revenues when it slashed duties on petrol and diesel in May last year. To an extent, the windfall tax could be used to plug that gap. All in all, it's likely that the government will continue with the windfall tax mechanism even if levies become nil due to fall in crude oil and commodity cracks.
Sapna, many thanks. Layoffs in the tech space are continuing in 2023. Retail giant Amazon says it now plans to lay off more than 18,000 people. That's much higher than the initial plan to lay off 10,000. Salesforce, meanwhile, says it plans to trim its workforce by 10%. Both companies say this is required since they hired too many people during the pandemic. Rima joins us now with more. Rima, tech layoffs continue.
Well, it's the new year, but the problems are old. Layoffs continue in the technology sector. Now, Amazon, which is the largest employer in the United States, has said that it's going to hand over pink slips to 18,000 employees. In the month of November, the expectation was that the tech giant would lay off 10,000 employees. But that figure has now expanded to 18,000 employees. It doesn't end there. Salesforce, another tech giant, has announced that it plans to cut jobs by 10% and also close some real estate offices. The company's chairman and CEO, in a letter addressed to the employees, said that the environment remains challenging and our customers are taking a more measured approach to their purchasing decision. He also said that as revenues accelerated through the pandemic, the company hired too many people, leading into this economic downturn which we are currently facing, and he takes full responsibility for that. So the question right now is, would you say the tech companies are right-sizing or are they downsizing? By right-sizing, we mean that perhaps the employee base got too bloated and now they're getting it back into their right size. So is it right-sizing or is it downsizing? And the other question is, why did the tech companies get their hiring plans so wrong? Why did they hire so aggressively in the first place during the pandemic that they now need to, 18 months, 2 years down the line, need to course correct?
Rima, many thanks for joining us and, in fact, taking that story forward. Speaking of a reversal of pandemic-driven growth markers, Microsoft Satya Nadella says the next 2 years will be challenging for tech as the sharp growth seen during the pandemic starts to taper off or normalize. Speaking exclusively to me, Nadella said he remains cautious in the short term. However, he is bullish in the long term. He also said that in sheer numbers, tech jobs have increased overall because there are more tech jobs that have been created outside of the tech sector. Take a look. Many CEOs are now talking about having to respond to the new economic reality. What is that going to mean, not just for Microsoft, but for the tech sector in general? Are we likely to see more pain, especially when it comes to retrenching, downsizing, margins going to be under pressure, guidance going to be a downside risk to that as well?
I think overall, quite frankly, whether it's for us as Microsoft or the tech sector, it's going to be very, very important to look inside and say, are we as efficient as we need to be competitive? I mean, at the end of the day, just because we are a technology company doesn't mean that we are the most efficient at what we do. And so as the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed, we have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we are not sort of immune, as I said, to the global changes. But the one interesting thing to your point, though, is tech industry employment is not tech employment. Yeah. That, I think, is the key divergence that needs to be well understood, because that, I think, is positive, by the way, for the tech industry long term. Because if you look at it, overall tech jobs is actually increased. the tech jobs now are coming in financial services, in energy companies, in retail, manufacturing, and that's healthy because in the long run, all those employees in all those industries are going to consume more tech infrastructure, right? When we think about our cloud business, long term we're bullish because of the fact that there's more employment outside of the tech industry of technical talent, and so that's, I think, what we are banking on.
And you can catch the entire conversation with Microsoft's Satya Nadella on Global Dialogues at 9:30 p.m. right here on CNBC-TV18. On to another exclusive tonight. The Finance Ministry appointed Committee on Private Equity and Venture Capital Investments has submitted its report to the government. They've recommended ways to accelerate the flow of investments into the startup ecosystem. The report has recommended ways to ease the regulatory burden as well as make some changes to taxes to attract more investments. Parikshit standing by with more details. This was a promise of Budget 2022. A committee headed by the former SEBI chief M. Damodaran was set up by the government, and that committee has now submitted its report. The expectation is these recommendations will be taken forward in Budget 23. What do we know about them, Parikshit?
Yes, this report was prepared by a committee headed by former SEBI chair M. Damodaran and had former members of RBI, Finance Ministry and economic experts. It was submitted to the government on the 19th of December. Currently, the Department of Economic Affairs is examining the report. We learned that the government could consider these recommendations for the budget as well, especially on the direct tax side. The report has exhaustively recommended measures to remove regulatory friction and accelerate PE/VC investments. One of the focus areas was to recommend ways to support capital needs of startups in a volatile environment. Among the recommendations, the committee has said that fund managers should not be burdened with GST on carried interest, and the tax should be imposed at the investor end, and the fund manager should be considered as a pass-through. Also, fund management service provided to foreign investors should be treated as a deemed export, and foreign investors should not be asked to pay 18% GST on availing service of domestic fund managers. The committee has comprehensively looked at requirements of global funds and held consultations with the DPIIT, RBI, SEBI and the DEA as well.
Parikshit, many thanks. Market regulator SEBI has agreed to reclassify the government's residual stake in IDBI Bank as public once the government succeeds in selling a portion of its stake. Remember, the government holds over 45% in IDBI Bank and is looking to sell around 30% to a new investor. LIC will also offload its 30% share in the bank. However, this reclassification will take place provided the government's voting right does not exceed 15%. This will make it easier for the new investor to meet SEBI's minimum public shareholding rules. That's not all. The government is expected to further clarify on the extended window the new buyer will have to meet minimum public float rules. Remember, the government had recently amended the rules as it applies to central public sector enterprises, government-owned financial institutions and banks, giving them an extension. These amendments effectively overruled SEBI's standard one-year window. And of course, remember, we are expecting the bids for IDBI Bank to come in by Saturday. That is the current deadline. Here's the latest in the ICICI Videocon case. Special CBI court in Mumbai has rejected Venugopal Dut's application challenging his arrest. Dut's legal team tells CNBC-TV18 they will now approach the Bombay High Court seeking relief. A day after the cabinet approved close to 20,000 crore rupees as the initial outlay for its green hydrogen mission, the Ministry of New and Renewable Energy told CNBC-TV18 the government will fund all the green hydrogen pilot projects under this mission. The government has also identified 3 areas, including steel, long-haul mobility and shipping, that will be part of the pilot project.
For the pilot projects, we are going to fund it. Essentially, we are going to fund the pilot projects. We have under the mission, we have provided for pilot projects in steel, in long-haul mobility, and in shipping. 3 industries, 3 areas we have provided the pilot projects. And from our learnings from these pilots, we want to expand it across those areas.
In an interesting development, Ishwara Reddy, the joint drug controller who was arrested by the CBI early last year, has been reinstated in the Central Drug Standard Control Organization. According to the government's notification, Reddy will be assigned the work of training and capacity building at the regulatory body until further orders. Reddy had served as the chief of CDSCO from Feb 2018 to August 2019. He was arrested by CBI on charges of accepting bribes to waive phase 3 trials of insulin injection developed by Biocon Biologics. He was granted bail by the Delhi High Court in September of last year. VodafoneIdea promoter Kumaramangalam Birla met Telecom Minister Ashwini Vaishnav to urge the government to convert the company's license fee and spectrum dues into government equity. This has been pending for almost a year. However, sources have said that the government is firm in its position that unless the promoters first infuse further funds, equity conversion will not be considered. Ashmit is standing by. So, Ashmit, the stalemate continues.
Well, no suggestion and no confirmation, at least coming from Kumar Mangalam Birla on that. And that was, in fact, something that the government was seeking clarity on from Kumar Mangalam Birla. Now, as you correctly pointed out, it's increasingly looking like a stalemate here. The issue has been pending consideration for over 15 months now. The issue was cleared by the cabinet back in September of 2021. Since then, the approvals have been managed by between SEBI and Finance Ministry. They granted approval by May and June of last year. The concern, however, that was raised by Kumar Mangalam Birla in his meeting was to, in fact, nudge the government towards taking a decision on the equity conversion that has been, in fact, waiting for clarity. Now, the government on its part, however, has made clear a couple of reservations. Number one, they've said that it is for the promoters, in fact, to come forth and bring in more funds. And number two, it is only after that fund infusion will the government seriously begin to consider and take an action on that proposal for, in fact, converting government debt into equity. And that is something which, in fact, is holding back this entire process. As far as fund infusion itself is concerned, no commitment has come from Kumar Mangalam Birla to the DOT, to the government in terms of any timeline or any quantum of funds perhaps that can be committed towards VodafoneIdea. No clarity on that front, and therefore this stalemate situation continues with either of the sides waiting for the other to act.
Ashmit, many thanks for joining us. India's startups are staring at a funding winter even as they struggle with their balance sheets. A slew of unicorns have reported losses that are mounting. But VCs who speak to us tell us that perhaps the next year could look different as many startups have decided to focus on unit economics, cut costs and improve their balance sheets. Arundhati Ramanan is here with a snapshot. Aru.
A whole host of unicorns have come out with their financials for FY22, and the losses are staggering as growth has come at a cost. An exponential rise in expenses and continuing high rate of cash burn is one of the major reasons for this. So let's start with BharatPe. The firm saw their losses balloon 3 times to stand at a little over 5,500 crore rupees versus 1,600 crore rupees in FY21. So what led to these losses? BharatPe said the total loss included an extraordinary item pertaining to loss and change in fair value of compulsory convertible preference shares amounting to 4,782 crore rupees. But even without this, the losses were more than what they reported last fiscal. Food delivery major Swiggy saw losses widen by 2 times in FY22 to come in at a little over 3,600 crore rupees. The increase in losses comes in the backdrop of rising expenses. Spends increased from 4,300 crore rupees in FY21 to a whopping 9,700 crore rupees in FY22. In fact, Swiggy's losses were 3 times higher than that of Zomato's, which came in at 1,220 crore rupees. That was still higher than what Zomato recorded in FY21. A rise in expenses led to the rise in losses. Meanwhile, e-commerce platform Meesho saw its losses mushroom to 3,250 crore rupees in FY22, which was an increase of 550% from the previous fiscal year. This as expenses in FY22 stood at over 6,600 crore rupees versus a spend of only 1,340 crore rupees in FY21, as advertising and promotion spends soared. Google-backed Mohalla Tech, the parent company of ShareChat, and short video app Moj saw losses close to 3,000 crore rupees versus 1,460 crore rupees in FY21. This as expenses rose to a little over 3,400 crore rupees versus half of that in FY21. And we can't forget EdTech major Byju's, which saw a loss of close to 4,588 crore rupees in FY21 from just 262 crore rupees in the previous fiscal. That's not all. Remember, other unicorns which came out with their numbers late last year also saw staggering losses, with Unacademy, PharmEasy and Daily Hunt all seeing losses of more than 2,000 crore rupees each.
The vast majorities of startups in India have used the last 12 months very efficiently to hunker down, focus on what's core to their business, focus on just customers and product, and really cut out a lot of the extravagance. So I actually think they're pretty well poised because they're well funded and capitalized from previous years, and they're actually getting ready to be entering 2023 in a much fitter way.
Well, fiscally fitter, that should be the story for India's startups, hopefully, in 2023. Let's take a short break. On the other side, aviation regulator, the DGCA, issues a show-cause notice to Air India in connection with the November incident of a drunk passenger urinating on another passenger on board. That and more when we return. Well, the Directorate General of Civil Aviation, the DGCA, has issued a show-cause notice to Air India and its crew in connection with a November incident of a drunk passenger urinating on another passenger on board a New York-Delhi flight. In its notice, the regulator has said that the incident came to the regulator's notice only yesterday, which is the 4th of December, but this incident actually took place in November. Meanwhile, the Delhi police sources say that the accused has been identified and FIR has been registered against him. Danish is standing by with the details. Danish, where does this probe stand?
Well, the DGCA has come down hard on Air India. It has issued a show-cause notice to the airline over the shocking incident, and the notice names the accountable manager, the director of in-flight services, pilots and the crew of AI-102. The DGCA notice says that provisions related to handling of an unruly passenger on board have not been complied with. It further says that the conduct of the airline appears to have been unprofessional and has led to a systematic failure and is devoid of any empathy. The airline has been given 2 weeks to explain why no action should be taken against it and its executives. Meanwhile, the Delhi police has identified the perpetrator as Shekhar Mishra, a resident of Mumbai's Mira Road. And according to sources, the accused is not in Mumbai right now, and 2-3 teams have been sent to different locations to trace and arrest him. And if he is not found soon, the police is likely to issue a lookout circular for Mishra.
Danish, appreciate you joining us. And staying with aviation, Goa Second Airport, the Manohar International Airport, commenced its operations today with Indigo landing its first passenger flight. Arriving from Hyderabad, Indigo is further set to operate 168 weekly flights between Mopa and other 8 major domestic destinations. The new airport with added facilities is expected to expand Goa's passenger handling capacity and boost the tourism sector. Home Minister Amit Shah has announced that the Ram Temple in Ayodhya will be inaugurated on the 1st of January 2024. While addressing a rally in Tripura, he said the Congress had hindered the construction of the temple. The Supreme Court has halted the forced eviction of people with houses on the railway land in Uttarakhand's Halwani. The court said that 50,000 people cannot be uprooted in 7 days. Added that the government must develop a scheme to provide rehabilitation. It has also given railways and the Uttarakhand government a month to come up with a practical solution. Email addresses of more than 200 million Twitter users leaked online. This is likely to be the biggest data breach suffered by the company yet. The Washington Post reports that the data has been posted to an online hacking forum. A political stalemate in the US. Republicans yet to elect a speaker for the House of Representatives as infighting continues. This is the first time in 100 years that the House failed to elect a speaker on the first roll call. The speaker is the third highest political officer in the US after the president and the vice president. Alice Barr with this story on the stalemate.
Ending to another day of chaos in the House, fueled by Republican rancor.
Those opposed say no.
And still no House Speaker chosen, leaving the people's business on pause.
The House stands adjourned until noon tomorrow.
Supporters of frontrunner Republican Kevin McCarthy managed to buy themselves more time to try to win over a small band of far-right rebels who are refusing to bend, locking horns with the vast majority of GOP members who want McCarthy in their top leadership post.
I nominate Kevin McCarthy for Speaker of the House.
Byron Donalds for Speaker.
Despite huddling behind closed doors and projecting confidence,
we'll keep talking, we'll find and get to an agreement.
McCarthy appears no closer to overcoming the far-right revolt, blocking him from becoming Speaker.
This country needs a change.
A small group of right-wing members holding firm against McCarthy, going against a last-minute appeal from former President Trump to, quote, vote for Kevin, close the deal. McCarthy refusing to bow out.
I still have the most votes.
The logjam locking out the lower chamber from handling any other business. A fraught preview of what may lie ahead for Republicans trying to govern with a razor-thin majority in the House.
When you look at the larger picture here, the stakes are even higher. This is really a fight over whether a small group or the vast majority of House Republicans will have control of the agenda while Republicans are in the majority for at least the next 2 years. In Washington, Alice Barr, NBC News.
Well, the political gridlock there in the US. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues on CNBC-TV18.